Welcome to Big Picture Trading. All right, welcome back everyone to another episode of Chart Talk. We're going to jump right in. We had the Qs and the S&P, pretty much all the major indexes closing at new all-time highs today, gapping up over the weekend and breaking out, bullish engulfing. Can't really ask for much more. Again, typically we tend to avoid the Monday morning gap ups from the indexes. It's not typically a trade we want to chase, but for the index as a whole, weekly or monthly chart for the market, can't really complain about what we've been getting from the price action, from the major markets. So month after month, nothing but higher highs and higher lows. Great, great action to see. Same thing with the S&P. Every month or every day, we think this is the top, and they keep showing us that the path of least resistance is higher. So very textbook breakout stage here. Again, the key thing here for right now in the S&P, again, this is a weekly chart, this 650 area is the key out. As long as we stay above 650 in the SPY, everything else is healthy price action. Even if we pull into 660 and run back up to 700 in time, all normal price action. We just want to see this 650 area continue to hold and act as support. And for the Qs, that area is this 590. So let me zoom in a little bit here. So same thing with the Qs, nowhere near this key out, but this is going to be the area we want to know when to get out when things get weak. Again, gold, we had, a lot of buying the last couple of weeks. We've been talking about kind of like the end of the move when people are chasing, the 100% run up. And what we started to see is the first 2 weeks of actually selling in gold. And we had a technical correction so far. And, this is a time where the pain trade begins. And we see, we'll see where this thing continues to pull back down to. So, when you're chasing up here, when it's up 100% in the last year or so, very tough to be buying up here. But unfortunately, that's what we were seeing. A lot of the financial news outlets were kind of pumping gold, and you had kind of newer, more naive investors kind of following that. And then you see the after effects of it, pulling in. So we have a big week ahead. We have the Fed announcement coming on Wednesday. The expectations are going to be another 25 basis point cut. Back-to-back rate cuts is a very bullish sign for the market as a whole. Again, it does seem like the indexes have kind of been front-running that expectation that we've seen, especially going into the start of this week. So we'll see if we do get that back-to-back cut. Again, very bullish sign. Don't expect fireworks on Wednesday. If we do get the back-to-back cut, don't expect a major gap up or some major bullish close, but it's very good news for the market over the next couple of months into year end. So just be aware of that. Again, VIX falling, dropping like a rock here. So we should expect to see, more normal price action than what we saw like a week or two ago. So pretty much all good signs that we're seeing out of the market. Semis have been the big leader in this rally. Again, semis have been running up against this macro resistance for the past few weeks that we've been highlighting. And surprisingly, it's actually been able to break out of this macro resistance area that's held for many, many years the last couple of days. So it's very interesting to see. You see names like NVDA, AMD, MU, all these names breaking out, which is, what's propelling this sector out of this macro channel.
Welcome to Big Picture Trading. We aim to teach you how to successfully swing trade in the markets while working 9 to 5. We've put together a program that we can teach you over a decade's worth of knowledge over the next 60 days at no cost. Sometimes something like this can happen. Now, obviously, we don't plan to crash or invest, but the reality is we know what you're doing. That can happen. If you'd like to learn more of how we can help you avoid mistakes like this one here, simply click the link below, schedule a call, we'll be happy to help.
Pretty much broad strength out there across most of the sectors. Financials have been strong. Healthcare very strong past couple of weeks, again, running up to major resistance. Biotechs have been on fire. Tech, no surprise there, extremely strong. So a ton of strength out there in the sectors. Not really that much weakness, which is what we want to see in a broad-based rally. Pretty much most of the sectors out here are looking very good. Again, there is some weakness. Materials have very much lagged in this rally. I've had this, you know, kind of H over pattern drawn out for the last month or so, and it really hasn't broken out of it. So we should expect a little more continuation to the downside in the materials as it just kind of hangs out here. Financials have been a little weak. Again, we've seen some names like Goldman that have started to break out, or Wells Fargo that have been flagging that look somewhat nice, but the sector still just feels a little bit like it did earlier in the year. We're just in a broad stage 4 breakdown, and we have the consumer discretionaries still setting up for this all-time high breakout. So we have this all-time high that formed here back at the end of last year. We had it retest back in September. But again, this is where profit taking tends to come into place. The people that are buying here are looking to get out here. We should expect that with gold as well. So this is like the high end gold at $4,000 an ounce. Expect some pull-in. It's been extremely strong lately, so there's no reason why it can't get back to that 4,000. But you can see here, even for this sector, it took many months for that to happen. So for gold, it's not to say that's the high of all highs, but this name, the gold has to kind of pull in, settle out, turn this prior, breakout level into support, and then climb back up to 4,000. And eventually down the road, we'll see that 4,000 breakout, but don't expect it to happen really anytime soon. So a lot of broad strength in the indexes, a lot of broad strength in the sectors. And now we can move on to a couple key individual names. So first up, we got this Roku. We've been keeping a close eye on it for the past few months now. Big base forming here at this 107 level, shorter term base forming at this 100 level. And we've seen this higher pivot low forming here, which is showing us the buyers kind of stepping up. Where in this base all these years, sport is down here at 50. This time is the first time it's really starting to kind of settle out here and form these higher pivot lows. So don't expect this to go tomorrow or the next day, but keep this Roku on your radar for when it eventually wants to break above this 100 and then break and close above this 107 area. PLTR, one of the best performing stocks this year, up nearly 1,000%, still flagging out here. Does have earnings coming up in a couple of days here, but at all-time highs, extremely strong name, very tight bull flag overall. So definitely want to keep on the radar. This IDXX has been basing out since last time I reported earnings. Great to see it just kind of flagging out here. Keep an eye on the 650 area, 655 area. Again, the key thing with all these names is going to be know when your name is reporting earnings. So earnings early November, that will most likely be the catalyst that's going to push it out of this base. Wouldn't expect, it to break before earnings. Roblox, another macro chart, textbook bull flag forming through this 140. Nice 20-point range here. Again, earnings, a couple days, but maybe earnings takes it away, maybe it doesn't, but that 140 level is the key area to keep a focus on for this Roblox. This ERJ was a nice breakout, big picture alert earlier this week through the 62. If you're still in it, probably raise this out to break even. And you got until the 4th to get out when it reports earnings. So for now, just cruising higher. Looks good. Current trades, again, still in this Tesla. Again, we held Tesla through earnings because we had that 20% cushion in the name. Still flagging out. Again, macro pattern through this 450, through that 450, 490 area. So not expecting much from the name over the next month or two. Should expect this to just consolidate and flag out more before it's finally ready. Whatever that catalyst is going to be, we'll know about it after the fact. But for now, just flag it out nicely. Looks great. Budweiser was a shorter term swing that we got into recently. A few weeks ago, consumer staples were somewhat undervalued, and we, took advantage of some of the names like Budweiser and Walmart for some, bull flag breakouts. For this Bud was nice little base break. We bought in through this 60. Nothing too crazy, just $2, $3 move so far. The key thing here is that, we had this break even stop here at 60, and we wanted to wait and see if a higher pivot low would form. So it puts in a high, we take some profits, it pulls in, and this is this higher low. It pulls into this area, doesn't fill the gap. This is now the new key out, and we really want to wait until there is a break above this 62. Once we get if this runs back up to here and we get a breakthrough here, this will be the time, when we get the breakthrough here, once we see that, then it's time to move that break even stop to this pivot low and then aim for that run up to the 64. So nothing too crazy for this Budweiser. Been a slow, steady winner, but good action to see with that nice higher pivot low forming. Again, NVIDIA, we tried it a little too early last week through that 184 and had gotten stopped out. For those still in, congrats. Again, this is definitely the key out right now, this 176. You're going to have key resistance at this 195, this retest area, so expect that in the next day or two. Also, the shell was another nice trade, but again, macro pattern, the shell has been setting up for, nearly 15 years. Let me zoom out a bit just to show this 74 level, it's going back to 2010. This is how long this thing has been setting up. So expect, even though it's breaking out a little bit here, it's a major, major pattern. So for those still in it, that real out is verse at 70. Just be patient with it. Again, you have earnings coming up in a couple of days. So if you're not, really looking to hold this, nothing wrong with just taking the gain and waiting for the next setup in it. Quick update on some of the recent big picture alerts. So we have this ALNY through this 460. It's pulled back in and turned that breakout area into support, which is nice to see. Short-term target is at 500. Aklo is, on the avoid list. We had a nice that final trade in it through that 145, that nice, 40-point run up. But once it broke this low here, this was the big, avoid in the name. This is when it becomes a much more choppier name to trade. This whole way up, which is path of least resistance, was higher. This high gets put in. It has this, pretty significant pull in. This is when you start to see lower highs forming. It's much more difficult to trade. You made the money in it. Just avoid it for the time being. Let it set back up, a couple months from now. GLW, an alert back from the summertime, back in August, still breaking out higher. Again, this is why when we find these winners, we want to stick with them and be patient with raising the stop. So even now, this GLW has broken out to new all-time highs. This has been the pivot low for the past month or so. This is where, after the high is put in, now this is really where you want to keep your stop and then see what the next pattern starts to develop. Very similar with this KNSA. We had an alert pretty much the same time. Nice earnings breakout. And same story here. Puts in a new high. And this is where you want to keep your new stop versus this pivot low versus like 36 half area. So moving on to some charts that some members have been keeping an eye on. Again, we talked about this Walmart with the consumer staples being somewhat strong, but we're starting to see some weakness come back to that sector as tech and semis have started to lead the charge again. So we want to kind of avoid some of these staples. Walmart was breaking out some all-time highs, did not get the follow through. It's back into the recent range. So you let it settle back out and set back up. Again, SoFi has earnings tomorrow actually, but this macro pattern in SoFi is one that we don't really want to miss through this 30 breakout, this all-time high breakout. Again, if earnings takes it away, gaps up higher, great. Let it set up for a month or two. If it gaps down, we still have another shot at that 30 breakout. Next up, again, semis have been very strong. AMD, new all-time highs. Again, this was the key out for this name since the massive gap up. And we have earnings coming up in a week or two. So again, long way away, 60 points higher. But this for now is the real. Anything you try to move it here, you're just getting, often going to get chicken out before these moves. So that's the real out for right now, that $200 level in AMD. Scrolling through a couple other names. Again, silver we talked about a few weeks ago. I believe it was in the last chart talk of why we would avoid silver in the silver as gold trade. Again, gold is new all-time highs, been hitting new all-time highs. Silver, this is, 14 years later. I'll switch this even to a monthly. And gold has still, silver has still not taken out its all-time high. So this is why you always want to focus on the leader, whether it's Tesla in the electric car market, if it's gold is the main metal. You never really want to try to buy the secondary play. They never get the same love or you know buying volume than you're going to get in those secondary plays. So again, just key example of why we avoid that. Key example of why retests are often met resistance. If you've been in silver for the last 15 years, you still are fighting to see an all-time high, and you get a monthly close like this, the move is lower. The fade back to 30 is more than likely than the odds of seeing this thing above 50 anytime soon. So this is why you don't want to chase the secondary plays and avoid losing money and stuff like that. We got this net, trying to break out through these all-time highs, multi-year setup here. Again, still kind of chopping around, has earnings very soon, but very strong name, great chart pattern. Want to see a move through that 230 area to finally clear it. Again, getting pretty close to it, about 10-point range, or I'm sorry, 10% range. So keep an eye on that to that 230 level for sure. Again, we're talking about financials being somewhat of an avoid. Again, Goldman, big day on Friday, but still, very easy stage, very difficult, choppy breakdown stage. So this is the easy time for the markets or for this particular name or the financial sector. And then it gets choppy. And this is when, you give back a lot of those gains. So this is, even though they were strong on Friday, Goldman and a lot of the financial names still are in a void. It's much easier to focus on the sectors that have shown strength in this rally, not the sectors that have been kind of chopping around in these little breakdown stages. So lastly, I want to talk about this VIX, VIX. Now that earnings season's in full effect, you're going to start to see a lot of names gapping up. You're going to see a lot of names gapping down. On the active swing trading side of things, if the name is gaps down, just avoid it, full stop. If it's gapping down, it's gapping down for a reason. You don't really want to fight that move. Now, if the name gaps up, a lot of times people try to chase that initial move. The name's up 10%, it's up 20%, it has to go higher. But very rarely you're going to get a gap up or a big gap of 10% or more and the stock just to continue on upward into perpetuity. Like people are going to want to sell. If you were in it the day before and you're now up 20%, first thought is to take profit. So if you're looking at names that have already gapped up after earnings or are about to report and gap up, give those names a month. Let them set up. This FIX is a perfect example. Name gaps up on earnings, sets up for flags out for nearly a month, never takes out that earnings low. We can see a very textbook bull flag forming, and then just wait to buy through the break of that flag. You get the break of the flag, it continues to grind higher. Again, this doesn't seem like much if you're watching this. If I zoom in, this is a 300-point move in one quarter. It's a 30% move in 90 days. It's, nearly a 3% gain a day. Again, a big chunk of this is from this secondary gap up. But this is really what you want to focus on when it comes to the names that have already reported earnings. They gap up, they flag out, you find the next entry a few weeks or a month later, and then you try to stick with that winner as long as you can. And if you're up enough, again, this really wouldn't have been a candidate on my end to hold into earnings because I'm only up, 10 or 12% from that entry. But if you do decide to hold and you get that next gap up, the thought is again, you want to hold till that next report. So for Tesla, we held it through earnings. Even if a Tesla gapped up huge, the thought is still to hold till next earnings. Now, we didn't get that with Tesla. We honestly kind of got better price action with it selling off and getting bought right back up, which is almost better than just getting a gap and go and running away. So it's showing us right now like 400 is the real out in this Tesla swing. If it breaks below 400, then we're wrong. But for now, as long as this thing holds above 400, it's going to continue to flag out, eventually set up for that move through this 470, through those all-time highs, and you got a big range here. So if you got, 70-point range in a flag, you should expect in the short term when that breaks, at least a 70-point move higher from that breaker level, which would send it, well into the 500. So with earnings, with the names that are reporting, you're looking at knowing they're reporting. If they gap up, give it a month. It's not going anywhere tomorrow. Let it gap up, let it flag out, wait for that entry to buy through the high of that flag, put the stop below the low of that gap up from earnings, and try to hold it as long as you can, aiming for a 5-to-1 score. And think of at least holding until it's going to report its next earnings. And that's the time where you decide to sell before it reports that following earnings. So don't feel like right now with earnings season full effect, you have to rush into a name just because it gaps up. This is the time to know when they're reporting and then have the patience to wait for those setups to develop. And trust me, the good ones will. So that's the gist of it for this week. Hope you guys found something helpful from this video. Any questions or comments that you have, just post them below and we'll go over the next week. Thank you. God, taxes are so stressful. 1099s, brokerage statements, I don't even know what that is. Oh, God. I gotta figure this out. I'm not gonna read this. If only I knew someone who did taxes. Scanner man, I'm stressed. I got 1099s, got brokerage statements. I got a menu from a Chinese food restaurant. I don't know what to do with that, but you gotta help me out, buddy.
Let me take a look. This is what you're worried about?
Stressed.
We'll handle this.
Thank God. What's it gonna cost me?
How much you make last year?
200 grand?
20% of that.
Oh God.
I'm kidding.
Now, obviously, we're not gonna charge you 20%, but everyone's tax situation is different. So what we recommend is for you to email us a copy of your most recent tax return, and then my partner Scanner here is going to do a review of your tax return and educate you on the possible tax credits you could take advantage of in the new year. Once we've done that, then we can give you an accurate quote of what we feel it will cost to properly prepare your tax return in the new year. Welcome to Tax Experts. My name is Bennett. This is my partner Skender. Throughout the year, I'll be your main point of contact, helping you organize and collect your tax documents for the new year. Once we've collected all of them, I'll be passing you over to my partner Skender,
where I'll be preparing your income tax returns and working with you to maximize your deductions and credits for the year, and also offer planning services for years to come.